Hello traders, welcome to the Nomad Traders channel. So today we'll be discussing on candlesticks. So what are candlesticks? A candlestick is a tool which depicts the motion of price with respect to time. Candlestick was introduced in the 18th century by a Japanese rice trader. He was able to correlate the relationship between the price of rice and the demand and supply in the market. He put it in a pictorial form, and that gave birth to the advent of candlesticks. A candlestick is a way of communicating information about how price is moving. In this particular graph, with time along the x-axis and price along the y-axis, you see candlestick formations depicting a particular price movement with respect to the underlying. What are the parts of a candlestick chart and how to interpret price movement? A candlestick basically is made of two elements, the body and the wick. The thinner part on the upper side and the lower side is called the wick. The body can be either in green or red. If it is green, then it is a bullish candle, and if it is in red, then it is a bearish candle. A candlestick is ideally made up of four levels: the open, the high, the low, and the close. These are four different levels of prices at various stages within the particular time frame of the candle. So, what are the types of candlesticks? Marubosu. Marubosu in Japanese means dominance. As the name suggests, it is an extremely powerful candle which shows that market sentiments is leaning towards one particular direction. It has a very large body with no wick or shadow. Look at this candle. The price has opened over here and the buyers have pushed the price all the way up till here, and the highest price and the closing price is one and the same. This shows a positive sentiment in the market. This you call it as a green Marubosu. In this particular candle, where the price has opened up here, the sellers started selling it and pushed the price all the way down, and the closing price and the lowest price is one and the same. This is a red Marubosu. This indicates a strong negative sentiment. Let's take a look at the examples. In this particular example, you see a big Marubosu candle which is followed by a series of green candles forming and taking the price higher and higher. In this particular example, there is a red Marubosu formed which is followed by a series of red candles which are pushing the price downwards. This clearly indicates that Marubosu has so much of power that it can take the market in that direction of the Marubosu, hammer or a dragonfly. A hammer or a dragonfly is a T-shaped candle with no upper tail and a long lower tail. Generally, the body is to wick ratio is of the ratio 1 is to 3. Only then it is considered as a proper dragonfly. This particular candle, the dragonfly, is a strong indication of trend reversal whenever it is formed at the end of a downtrend. Let me explain you the rationale behind how this particular candle is formed. The price opens up here, then the sellers push the price all the way till the lowest point, and at the lowest point the buyers step in and they buy and push the price all the way above the opening price, closing it in green. This indicates that the buyers are strong here and the trend is going to reverse to the bullish sentiment. The color of this particular body doesn't matter whether it is green or red. In this particular example, after a short downtrend, you could see a strong dragonfly forming over here This is followed by a series of green candles which takes the price high. A shooting star or a gravestone. A shooting star or a gravestone is an inverted T-shaped candle which has a long upper wick and a negligible or no lower wick. This, when happens at the end of an uptrend, indicates a strong sign of trend reversal. Let me explain you the rationale behind the formation of this candle. The price opened up here and the buyers tried to push the price and take it high. At this particular high point, the sellers stepped in and they started selling and they pushed the price down until this close point, which is lower than the opening price. This indicates a strong negative sentiment towards the price of the underlying. This also indicates a change in the trend. In this particular example, you see this strong uptrend is ended by this particular shooting star or gravestone which has a very long tail. Following this, there are a series of strong red candles which are taking the price very low. So there is a change in the trend from bullish to bearish after the formation of this particular shooting star. A doji or a spinning top. A doji is a candle with very small or negligible body and it has equal length wicks on both sides. A doji is a sign of indecision. It shows that the market wants to take a pass. It shows that the bulls and the bears are not sure which way to take the market ahead. This may sometimes also signal a significant change in trend once this is formed after a strong uptrend or a downtrend. In this particular example, you see the price rallying from here till here. At this point, the market is totally confused which direction to go, and this is evident by the fact that there are multiple dojis forming up over here. At this particular point, the market decides the direction and takes the price downwards. In this particular example, after this sharp selling, there is a doji formed over here. Post this doji, there is a series of green candles changing that trend and taking it higher. So, in such cases, doji acts as a sign of trend reversal, but it is not the case in every chart. So, I hope the information which I gave on the candlesticks will be very useful and it will better your journey as a trader. If you like the content of this channel, please do like, share and subscribe this channel. Do share it with your friends. Thank you.